Eric, great to have you back. Appreciate the time.
Thanks for having me on, Carl.
So before we get to the individual calls, does it say anything about how your universe is shaping up right now? Are you thinking about it differently, at least from a valuation perspective?
Well, I would say that in the digital advertising space, our broader message this morning was generally, as we went out and had ad industry checks through August and September, that things are nowhere as bad as feared out there from investors. I mean, this subsector within our coverage has performed very poorly in the last 3 months. There's almost a set conclusion among investors that we're headed towards an ad recession. And I feel like I come on every couple of months and talk about how we're not yet in an ad recession and numbers are likely going to be better than feared. And I think as you look across the group, that's likely going to be the case again with digital advertising. There's still strength in travel, the reopening around local, media and entertainment. And while there are some subsectors as advertising verticals like housing and autos that have gotten a little harder, generally we think the back to school, e-commerce, some of these verticals came to the positive. And hence we saw an opportunity in something like Pinterest to come off the sidelines and go from neutral to buy rated.
Yeah, a lot of this is based on your third-party work, and you're basically looking at better trends in user growth and engagement. And it sounds like maybe a bit of share shift in terms of dollars.
Well, I think there's a couple things to point out on Pinterest. Short term, the user trajectory, the revenue trajectory, we think is going to be better than what the company guided in Q3 and much better than what investors feared looking out into the back part of the year. That's point number one. Point number two, you got a new CEO in Bill Reddy. Bill was out at our conference in San Francisco a couple of weeks ago. Some of your colleagues joined me out there at the conference. And I think Bill laid out a really interesting long-term narrative about where he wants to take Pinterest, a focus around commerce, a focus around bringing more shopping to the platform. And we think this is really the future of Pinterest. It's not as much a social media company as we believe it's more of a commerce engine. So really what we're looking at is a reinvigoration of growth, an expansion of margins starting in 23 against a backdrop where we think numbers will be better than expected over the short duration.
Hey, Eric, it's John Fort. You talk about Pinterest wanting to be a commerce engine at a time when we're not sure how well that car is running overall in the economy. So I wonder if you have any sense from your checks on how this inventory imbalance that we've seen over the last few weeks is affecting and is going to affect digital advertising through Q4 and possibly into Q1.
Yeah, great question, John. I think 2 points to make. Number one, we see Pinterest coming off a low base. So when you're an advertising business and either turnaround or starting to monetize traffic that's been or low monetized to date, the cyclicality of the industry just frankly impacts you less because you're coming off that low base. We're going to see cyclicality play out more among the bigger players in the sector, not the emerging players in the sector. That would be point number one. The other thing that came through in our advertising checks is that when you do have inventory, retailers and brands tend to be promotional. And as a result of that, we're seeing almost more money spent on the marketing side to clear that inventory ahead of the fall. And we made the point more broadly that we saw a pretty healthy back to school environment here in the US. That has a secondary read into the advertising market as well.